there's so many banks that have a lot of office loans, commercial real estate loans, that if one of them goes bad, all of a sudden investors don't know what to do and they sell the bank, and then you start a contagion. This is definitely going to cause a contagion at some point. And the cancellation or the ending of the bank term funding program is going to speed it up.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for January 29th through February 5th, 2024, while supplies last. This week we have silver Valcambi or Asahi 100-ounce bars at just $1.39 over spot per ounce. We also feature pre-1933 gold $10 and $20 Liberties at $89 over melt and $139 over melt, respectively. Next, backdated 1-ounce silver maples are at $3.75 over spot with a minimum order of 50. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Rafi Farber from the Endgame Investor. Rafi, thank you so much for joining us today.
Thanks for having me again, Elijah. Good to be back.
Well, it's great to have you. It does sound like, based on our conversation before the interview started, that there are concerning developments where you are in Israel. Can you share with our viewers the latest that you've heard there, and also what it has taught you about preparedness?
Well, this past week, I'm in northern Israel in the Golan, so there hasn't been much here. Most of the action is in the Galilee, which is south of Lebanon. I'm south of Syria. But we did have our first alarm that resulted in actual explosion. We had some false alarms at the beginning, and they were just birds, hypersensitive systems that were just like going a little bit wacky. But I heard an explosion. It was apparently an unmanned aerial vehicle surveillance, but sometimes they can have bombs attached to them. You never know. So it was blown out of the sky, and it hit the industrial zone, and I heard the boom. It wasn't too loud, but it's there. So, now I know the war is actually here. What I'm hearing is that, and again, I don't know what's true. I don't have a line to the government or anything, but it seems that they're trying to wrap things up in Gaza as best as they think they can with some kind of deal, and then move all the forces up north and then open up the front here. I don't know what I think of that because I don't trust this government to actually try to do anything that makes any sense. But in terms of preparedness, I've already done a lot of prepping. In terms of getting essential stuff, I've divided my stacks among trusted friends all around the country, so they're not in one place. If I have to evacuate, I'm not leaving all my stuff behind. Sentimental stuff and valuables I've put with different trusted people, and it's a very different thing when you might have to run, because initially it's just like the panic just hits your head, and then you realize you have to start thinking systematically and then take one thing at a time. And that's what it's going to be like for everyone in the end game. When gold and silver just keep going up and up and up and up, people are going to panic, and even the stackers are going to panic because, okay, what are we going to do now? Am I going to be able to spend my gold and silver, or are people going to remain civil? And we're not going to know any of these answers to these questions. But for me, you just have to breathe and take it one step at a time and realize reality is reality. You can't change it. You just got to go with it and do what is best for your family.
And I mean, it sounds like maybe some hard decisions to make as well. You mentioned how, like, you have plans within Israel. You have many different places to go. And I think for other people who aren't looking to make their dramatic change of having an option of like to leave the country and stuff like that. For example, here in the US, some people may consider having a place in another country, but it's good always to have more options, right? And even within the country, you can do that, as you've shown. Did you have any thoughts on that?
Yeah, well, for traveling around the country, there's not many places I can go. Israel is tiny. Wherever I go, the government knows exactly where I am, and I can't really get away from the war. There's nowhere I can really go. I mean, I'm in one of the quietest places. But if you're in the U.S., you have pretty much a whole continent or half of a continent to go to. I mean, there's plenty of open space in the U.S. if you feel like you have to get away from civilization for a while. I'm not even talking about a bug out place where you dig a bunker and have all your supplies. I'm not talking about that. But if the end game is getting a little bit much for you, you can just park and go to a forest for a while with your family for a week or two with some supplies and just relax. Not necessarily hide, but there are things you can do just to get your mental shape back into focus, which you might need to do, especially when things get really bad. Who knows this coming election season if the Biden campaign pulls something dirty and the Trump people get angry, and then there's not January 6th, but something a little bit more real than that, or Texas decides to declare independence or something because they can't stand the Biden administration and they're already standing up to it and threatening a civil war. I don't know how far it's really going yet, but there are definitely instances of disobedience in the United States that will only get worse, especially if there's somebody's accused of election fraud on whatever side. So you might want to start thinking of not necessarily places to run away, but some vacation spots that are away from civilization that you could go to, maybe to watch the election from there and hope nothing happens and just relax. But staying calm is the most important thing.
Yeah, no, I think that's very good. And we appreciate your perspective there. And obviously our prayers are with you for your safety over there. And thank you so much for sharing that with us. I did want to ask you about other troubling concerns more in the banking system right now that you've been reporting on quite a bit. The BTFP, the Bank Term Funding Program that the Fed put out to really rescue a lot of these banks last year when banks were starting to fail, that will be coming to an end. And we've talked about this on the channel with you. I was wondering if you had any updates. This will be kind of the end of the lifeline that has been propping up the banking system. So what does that mean for the banking system in general going forward here?
Quantitatively, the Bank Term Funding Program, just in very simple terms, is banks can give the Fed all their treasuries and then get the face value of it in a loan for a year for the reserves. And those reserves have to be paid back. So numerically, what it means is the Bank Term Funding Program started on March 11th, ends on March 11th, but most of the loans, the big chunk of the loans, were made by April 5th, and those have to be paid back. And I think it's something between $70 and $80 billion of loans were made by April 5th. So if the program is not renewed, we're going to have to see the equivalent of about $80 billion in quantitative tightening, QT, when these loans are paid back. Because when a bank, let's say, pays back the loan to the Fed, and then they get their underwater treasuries back because it was a swap, then all the money, all the dollars that they pay to the Fed to pay back that loan, those dollars go out of existence, right? They're not spent by the Fed back into the system. That would be QE again. So quantitatively, we're going to see something between $80 and $100 billion of quantitative tightening by April 5th. And if there are no more reverse repos in the system and they're draining fast now, I think they're down, the last time I checked was a few minutes ago, I think it's $500 billion now, so we're down to our last $500 billion. There's going to be a crunch probably in the repo market, probably in the overnight lending market, like something like we saw in September 2019, but not exactly that. I don't know exactly what it's going to be. It could be more banks failing, just like we saw with New York Community Bank Corp, I think it's called. That was yesterday. I think they didn't collapse completely, but they had this big loss, $150 million loss from an office loan that went bad, a single office loan. And a co-op loan. There's so many banks that have a lot of office loans, commercial real estate loans, that if one of them goes bad, all of a sudden what they thought was going to be like, let's say, a $300 million profit for the quarter, or for the quarter ends up to be like a $300 million loss. And then investors don't know what to do, and they sell the bank, and then you start a contagion. This is definitely going to cause a contagion at some point. And the cancellation or the ending of the Bank Term Funding Program is going to speed it up.
It does seem like we're seeing more potential failures in the banking system. We see concerning developments, as you mentioned, with New York Community Bank. Also, Western Alliance stock has been down, which was a bank that was having issues last year. What do you think that means for the safety of deposits if more banks start to fail?
I think the safety of deposits is irrelevant. It's not. You don't really have to worry about the nominal dollars in your bank account. Every bank will be bailed out nominally. I have no doubt about that. They're not going to let a single bank really fail where depositors don't get 100% of their dollars back. The thing is, like, the question is, how much are those dollars going to be worth? And the answer is not that much, because remember, the dollar is still a derivative. It's a derivative of real money, and real money is gold, and below that is silver. At the end of this, it's one of two possibilities. Either 95% of people lose all their deposits, and then whoever is left has, let's say $35 an ounce per in gold in dollars, or everyone has all their nominal deposits and you have $35,000 an ounce, and nobody but the stackers has any real money. Which it's probably going to be that one. This is why we prepare as we do. But even if it's the other way around, it's not going to change gold's purchasing power. There's still going to be the same amount of stuff available and the same amount of gold available. So that's not going to change. Don't worry about your deposits. Just worry about what they're going to be worth, and keep stacking responsibly, slowly but surely. And the more you stack, the more outside of the system you are, and that's how you stay safe, at least monetarily.
It seems like a lot of people currently, though, can't even, prepare in that way. We talked before the interview about doom spending. In a sense, a lot of millennials are just, running up credit card debt, going into debt, not thinking about tomorrow. What do you think the ramifications are for the economy, this kind of reckless spending that people are and in some circumstances may have to do just because to pay for basic bills because inflation has hurt them so much?
I wouldn't exactly call it reckless spending. It's more of giving up. It's sort of like what's that word? Not like nihilistic spending. Not nihilistic in terms of these people just want to die, but they don't care about the dollars anymore. It's like the analogy that I use a lot is the apple tree. Once if the guy's losing apples in his backyard, but he doesn't notice because his neighbor is clandestinely taking them, then he won't do much about it, and he'll keep tending the tree and growing the apples. But if he realizes that his neighbor's just taking all his apples, he'll cut down the tree. Because why should he feed his neighbor? He'll cut down the tree, take what he can, and that's it. And that's what happens in hyperinflation. That is hyperinflation. Hyperinflation is the change in psychology from I'm going to try to save even though prices are rising. I'm going to try to save, as opposed to look at housing prices. Look how much it costs to raise a family. I'm not even going to try to reproduce. I'm not going to try to raise a family. I'm not even going to try to build or buy a house. I'm just going to spend on a lambskin tote bag and make myself feel better. But that's one stage. Then the next stage is I got to get rid of this money immediately and buy whatever I can find on the shelves. I don't care what it is. That's hyperinflation. But I wanted to bring this to the point of back to silver again, because back in the 90s when I was a kid, right, there was still inflation, but you could still hold on to a wad of cash, and as a kid you could smell it and it smells like money and it makes you proud, and you're like, no, I don't want to spend. You have an instinct. You don't. At least some people have it more, some people have less. I don't want to spend this because this is my money, and if I spend it now on this, I won't be able to spend it later on something else. So you have a natural inclination to save. But if we're talking about a silver coin, right, versus let's say a digital number in a bank account, when you log into and you see a number on a screen, you have $1,000 versus you have $1,000 in weight in silver. If you start young and you make kids understand what money is and what saving really is, like saving real hard money, it's a shiny coin. It's even more of an instinct to hold on to it, to save it, as opposed to like a dollar bill, which is it's nice, but it's just a piece of paper. As opposed to even further from that, a derivative of that, which is a number you see on a screen, right? So if you train your kids to earn silver or to earn real money for chores they do around the house, then they become immune to this despair, nihilism that they see when the monetary system is falling apart. Because they say, look, I have silver, it's going up. So this is the reason that they're becoming so despairing is because they don't know what money is. And our job when this is over is when their dollars are no longer worth anything and they have like a tote bag from the splurge that they did today to make themselves feel better, then we can say, okay, we have money, we can start over. And even these people, they have their role to play, right? There's no qualitative difference between emptying your dollars to buy a tote bag and emptying, or some luxury item, some luxury consumer item, and emptying your dollars to buy gold and silver. I'm not saying to empty them, but we need everyone to come in and empty their dollars for anything they can, and that means the dollar is dead. We're just doing it more responsibly than they are, but they're coming to the conclusion that we're coming to, just in a much more superficial way, but it's essentially the same thing.
I think it's really important to remember that gold and silver are outside of the system, and it gets you back to reality, as we've talked about so many times before. If we're in this fake financial system, then that can kind of have an influence in other areas of our life, of just living kind of a fake life, living based on lies. Did you have any updated thoughts on that? How living in the fake financial system can actually be negative for your life itself?
In the most basic sense, the lie of inflation makes you think that you have more money than you do, and then it will incentivize you to buy things that you can't afford, and then all of a sudden the dollar is worth very, very little, or you'll go into debt, and all of a sudden the dollar is worth very, very little, and you're stuck. Right, because you were living a lie, and we're all victims of that, no matter how slow inflation is going. The difference between an inflationary system where people are still functioning and hyperinflation where it's over is not that people are becoming more poor. It's just that reality is revealing itself finally, and then once people tell me that, let's say they go on a diet where they're only spending cash and not using credit cards, right? Then they have a more personal relationship with what money really is, even though it's not quite gold and silver. It's closer because it's something physical. And then they have more of an appreciation for resources, whereas if they spend something, they appreciate it more because they actually have to take the paper out of their wallet and give it to somebody, and now their wallet is lighter. Right? With gold and silver, it would be even more extreme. Imagine what you would feel if in the end game you had to buy a house for your family with 6, 7, 8 ounces of gold or whatever it's going to be, and you have to, like, these coins that you've been stacking for so long, you have to give them up to somebody, and you get a house. You're very proud of yourself, but you're going to value this house a lot more, let's say, than if you had like a 30-year mortgage on it and you're paying $2,000, $3,000 a month to a bank. You'd still value it then, but if you buy it with your own real money, it's going to be even more valuable. And it just gives you an idea of what things are actually worth in your life, and to appreciate them more and to be connected more to what you acquire, not with credit, but with hard money. And it gives you a connection to reality, and it calms you down.
Now, before we let you go, I did want to touch on another concerning development in the financial system here globally. With Evergrande, it seems like we're seeing the collapse finally of Evergrande in China. Can you share with our viewers kind of what it means for the real estate market in China, and also how it could reverberate throughout the financial system here globally?
Okay. So when I heard of Evergrande finally collapsing, I've been waiting for this for years, since 2021 when they missed a bond payment. But it has a lot to do with the fact that China never really went through a housing crisis in 2008. Right? They never did. If you look at their housing prices in 2008, they went sort of a little bit down. I'm not saying they were unaffected. They were definitely affected, but they didn't have a housing crash. And what is the effect of not having a housing crash? The fact that they have like 60 ghost cities of, I think, 65 million empty apartments. Now, what does that mean economically? If you go back to Economics 101, that's just a surplus, right? When you have a surplus of a good, Chinese have a big surplus of housing. That just means the market isn't clearing. The price is too high. If the price of something is too high, you end up with a surplus if it's not the market rate for that good or service. So the fact that they never had a housing collapse would mean that they would have ghost cities because the housing is still too expensive and that's why people aren't buying them, which just means there's empty houses. So now you have all these firms that are holding on to these ghost cities and unable to sell their inventory, so they're going bankrupt, and that's what's finally happening now. And so the housing crisis that China never experienced in 2008 is going to happen. I'm not saying right now, but like that's where we're definitely headed. And there's not much that People's Bank of China can do about it, because the other thing about China that's very different from Europe or the U.S. is that they're not participating in this rise in interest rates. Interest rates in China are at all-time lows, right? So they're on like a different wavelength. But a lot of people think that they're going to come out on top when the dollar crashes, but I don't see how that's possible, because they sold all their stuff to the U.S. in exchange for a bunch of dollars that they keep in their basement, and then those dollars go bankrupt. And like, how does that help them? They're going to be in a lot of trouble, and anyone who's related to them economically is also going to be in a lot of trouble. When you have these trade imbalances, it's both parties that are lying to themselves. So I don't see any single country coming out of this better than any other country. I think we're all one giant pyramid, and I think it's all about to fall. And China's a big part of it. So let's see what happens there.
Are there any specific preparedness steps, or is this, I guess, as you mentioned, it's a kind of a domino, it's one domino in the system that seems to be falling. Is there any specific ramifications from the Evergrande collapse that you think are unique or noteworthy that people in the U.S. or in Europe should be concerned about?
Specific with Evergrande, if you're invested in Chinese real estate, maybe, but I'm not really familiar with that market. It's not something I really follow. I would watch, I think it's called Country Garden, is another, I guess if you're invested in like Hong Kong real estate stocks or Hong Kong listed Chinese real estate stocks, I wouldn't, bet on them if they're like, let's say, pennies in the dollar and you're looking for a jump because you want to, drop, or catch a falling knife, they say. I would stay out of these. And don't buy Hong Kong listed real estate stocks now. So just don't try to do anything too clever or creative. I would say just sit back, relax, watch what happens, and do what you need to do in terms of stack resources, stack friends. Not like gold. Keep good people around you who know how to do things, and keep building your local community is what I'd say. And don't take anything overly seriously.
And if our viewers are interested in continuing to track this with you, you have a Substack available for our viewers. Can you share with our viewers about that?
I moved to Substack. It's endgameinvestor.substack.com. You can find it pretty easily. I put out usually one free article a week, and 3 times of tracking the end game in real time, 3 times a week. So it's 4 times a week in total. And I sometimes I wax philosophical about money, which is where my brain goes. So if you like to hear that kind of stuff, you can subscribe for free, and you'll get that about once a week. And also, if you want my biblical perspective on things, then you can either become a founding member of the Substack, and then you'll get free access to that, or you can sign up separately to be my patron on Patreon for as little as $3 a month. And I put out a once weekly class on biblical teachings on money and economics and government.
Fantastic. Rafi, thank you so much for your time as always, and God bless.
You too.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for January 29th through February 5th, 2024, while supplies last. This week we have silver Valcambi or Asahi 100-ounce bars at just $1.39 over spot per ounce. We also feature pre-1933 gold $10 and $20 Liberties at $89 over melt and $139 over melt, respectively. Next, backdated 1-ounce silver maples are at $3.75 over spot with a minimum order of 50. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.